Hello, everyone. My name is John Howe-Wemett. I'm the financial planner here at Generation Capital Management, and this is another episode of John's Top Tips. Now, if you've ever tried to research the rules around gifting, you've probably ended up confused because the rules around gifting are not intuitive at all. While it might seem like a relatively simple concept, it can actually be a pretty complicated idea to explain. Now, we don't offer tax advice, but I can help clarify some details for you. So let's walk through it a little bit. First, let's start off with a question. What is a gift? Well, we all use the term gift a lot, right? We throw it around a lot, especially around the holidays. But the word gift has a very technical meaning and it's important in financial planning. And the concept of a gift is the transfer of anything of value without the receipt of anything of value in return. So if you think about any time that you've given a gift, there's usually not an expectation of anything coming back to you. That's pretty much what a gift looks like. So then we kind of move from there to the question of who pays tax on a gift. Well, you've heard the term gift tax before, so that's probably why you're curious about it. We don't necessarily mean gift a tax on something like if you give a stocking stuffer or something along those lines. But we do need to make sure that we understand it. You might actually be surprised to hear that a gift tax is actually paid by the giver of a gift if it's paid, but it's rarely ever paid at all. The great news is that the recipient of the gift usually doesn't pay tax upon the receipt of the gift, and they don't ever have to claim it on their taxes, really. So the person who's receiving the gift doesn't really have to worry about gift tax ever. Well, what about small gifts? What does all of this mean then? Well, the gift tax is essentially designed to prevent wealthy people from transferring their wealth to avoid estate taxes. So most of us will never need to worry about gift tax. They don't mean to apply a gift tax on gifts that are being transferred between kind of everyday people. But you should know the rules nonetheless. The reason that the gift tax is almost never paid is because most gifts actually fall under the annual gifting exclusion. Now, the annual gifting exclusion in 2022 is $16,000. This means that any person can give any other person a gift valued at $16,000 or less without it counting against your lifetime gift tax exclusion. And as of right now, your lifetime gift tax exclusion is over $12 million. So most of us aren't going to be transferring things that are worth more than $12 million during our lifetime. So we don't have to worry about the gift tax. But if you if you transfer a gift that's over the annual gifting exclusion, you do have to report that on your taxes each year. Essentially, it's an informational piece, and the IRS will keep track of it for you. Now, I know that's a lot. It's kind of in the weeds. But it boils down to you not necessarily having to worry about gift taxes. If you do have to worry about gift taxes, or if you still have more questions, please feel free to reach out to us. You can contact me directly. My email address is jhow@gencapngmt.com. I'm happy to answer any questions that you have about your gifting situation, when it becomes advantageous, anything that might be on your mind. I'm happy to answer questions for you. Again, my name is John Howe-Wemett. I'm the financial planner here at Generation Capital Management, and this was another episode of John's Top Tips.